Welcome, everybody, to Options 360. So, among all the questions that I get asked from people interested in learning how to successfully trade options, probably the most common by far is, what is my favorite strategy? What's the best trade setup? Well, I like many. I definitely diversify across multiple strategies. I think that's important. I always say, as option traders, we need a large toolbox. We can't just have a hammer. We can't get by with just a single screwdriver. We need multiple tools so we always have the right one for the job. The right tool for the specific market environment. Having said that, naturally everybody's going to have their favorites. That's normal. And for me, it's the Iron Condor. In fact, one of my earlier trading websites was called theironcondor.com. So this is definitely a trade that's near and dear to my heart, and I want to teach it to you today. So thanks for joining me. Now, the Iron Condor is definitely considered one of the more advanced option spreads, but don't let that discourage you. It's actually much simpler than it may appear on first glance. We can open and close them in a single transaction, so practically speaking, it's as easy to trade as any other option type. It's all bundled into one trade. Now, I'll dive into my trading software and go over a full example for you shortly. But right now, let's just break down what it is. The Iron Condor is constructed by selling both a short vertical put spread and a short vertical call spread for the same expiration. Again, it's a single transaction, so it's much easier than it may look, but that's how it's opened. And when we do that, here's what the trade looks like. Now, I say short Iron Condor here because you can also trade them on the long side. But I rarely open long Iron Condors, so when I'm speaking for my videos, in my blogs, I just say Iron Condor. Always just assume that unless stated otherwise, when someone says Iron Condor, they mean it's on the short side. So on the horizontal axis here is the price, and on the vertical axis, the profit. Now, one of the benefits of the Iron Condor is that because it's opened with two vertical spreads, which are limited loss trades in themselves, the Iron Condor as a whole is also a limited loss trade. We know exactly how much we can potentially lose right from the outset, so managing risk is much easier to define. And the maximum gain for the same reason is also known in advance. So limited gain and limited loss, defined at the outset of the trade. Now, because Iron Condors will always be closed out well before expiration, the only thing we focus on is the daily profit curve, which is that pink line. The trade is managed entirely based on that, so I'll explain what it is in my example shortly. But first, let's talk about the Greeks. The Greeks are statistical values that provide us a way to measure the sensitivity of an option's value with respect to other factors. We have price, time, and volatility. Delta is an option sensitivity to price. Iron Condors are delta neutral, also known as market neutral, and the trade profits from a lack of movement in the underlying. So we are indifferent to direction, up or down is fine, as long as it doesn't move too far in either direction. Theta is an option sensitivity to time. Iron Condors are theta positive, meaning the position gains value with the passage of time. Every day that goes by, the contracts decay a little bit, and Iron Condors benefit from that daily theta decay. Lastly, Vega is an option sensitivity to volatility. Iron Condors are Vega negative, meaning they benefit from decreases in volatility. This is why it's more advantageous to open Iron Condors during times of higher volatility. The higher it is, the more room there is for it to fall, and the trade can benefit from that decrease in volatility. Okay, so here we are inside the Thinkorswim platform. Now, of course, yours won't look exactly like this, but it should be similar enough. And today I want to go over one of my favorite market-neutral trades. And when I say market-neutral, I just mean directionless. We don't care whether the stock or the underlying index goes up or down. We just want it to stay within a reasonable range to capture our profit. Now, of course, there are times when this wouldn't be appropriate. If you remember, after the 2016 election, pretty much all of 2017 was a trending market. It was just very low volatility, stocks marching higher month after month. That would not have been a very good time to be trading market neutral. But you can see here, we're looking at a 2-year chart of the S&P 500, and aside from the major crash in Q4 2018, markets have stayed within a fairly tight range here. Somewhere around there, right? So buy and hold investors have really been spinning their wheels. This is why I always encourage people to learn the fundamentals of option trading, because it can diversify a broad portfolio. Certain option strategies can make money when everybody else is spinning their wheels. So today I want to put on one of those market-neutral trades. Now let me show you really quick why this is such a powerful trade. If we just look at the last 8 or 9 months or so, We can see where the price is now. We're sitting about 291.62. And Monday morning quarterback, we can see all the prices in the past. We can see when it went up, when it went down. But what we don't know is where we're going moving forward. From where we are today to 2 months from now, we'd be fooling ourselves to think that we knew. Maybe we shoot higher. Maybe something bad happens and the markets collapse. Nobody really knows, but one thing we do know, and this goes back to those statistics classes that many people find boring, but if you recall the bell distribution, standard bell curve, we know there's about a 68% probability that future values will land within one standard deviation of where they are now. So applying this to the S&P 500, here we are right now. We know there's about a 68% probability that the price of the S&P 500 will be within one standard deviation of today's price. Now, obviously, it can deviate. Bad things do happen, and sometimes markets do go on tremendous rallies. But the probability is pretty high that it stays within a range. That's the power of market-neutral trading. And there's really two choices whenever we want to do one of these trades. It's either an iron condor or a calendar, and that entirely depends on the level of volatility in the market. Iron condors, as I showed before, are Vega negative trades, and calendars are Vega positive. So depending on the volatility, that's how we decide which one. Now, this is the VIX index. It's not the best volatility index. I actually have one myself that's better, but it's a pretty good rough guide. So right now, given that market volatility is elevated, certainly the iron condor is the best play. And since we also know there's a 68% probability that it will stay within that range, this is why the iron condor is such a nice trade. You can see the same thing here. We want it to remain in that middle range. High probability trade. The odds are definitely in our favor. And this is why I like this trade so much. So let me show you how I'm going to put mine on. So the first thing I need to do is select the underline. Now in this case, I am going to use the S&P 500, but there's two choices here. We can use the SPY, which is the ETF that tracks the S&P 500, and this would be appropriate for smaller account sizes because the notational value of the SPY is roughly 1/10 of the SPX. But if you did have a larger account size, you could also trade the SPX. That's fine as well. But let's do the smaller account size one today and stick with the SPY. Now the second thing we need to do is actually choose an expiration. Now because iron condors are theta positive, we benefit from the passage of time. So I do like to stretch out the expiration a little further out than I would a calendar spread. Typically I'm targeting about 60 to 80 days to expiration. And this 18 October 2019, expiring in 67 days, that's about perfect. So let's go ahead and select that one. I will go down to the at the money price here, and I will just sell an iron condor. Now, of course, you're going to package this into one single trade. That's why they're just as easy to trade as any other spread. You just do it in a single click. Now I'm going to go down and adjust to one contract just to make the math easy. And this is what it looks like. Now that's a very small sliver of profitability. So of course, we're going to want to stretch out these strike prices. In general, there's two ways that people do this, and depending on the situation, I do use both of them. The first way is simply using the delta. You can actually target a certain probability, depending on your outlook, say 20 or 15, and then you could do that on the call side as well, looking for that delta column. That's one way to do it. The other way to do it, which I'm going to do today, is just use a roughly equal distance from today's price. So 291.62, I'm going to go up 7% and down 7% and use those strikes. So from 291.62 up 7%, that's going to be the 312 strike. And then you just fill in the long, maybe $2 to $3 above that. Today, let's do the 315, $3 strike gap. And then 7% below 291.62 is around the 271 strike on the put side. 271, and again, we're going to do a $3 strike gap, 268. So actually, this is what our trade looks like. This is the familiar iron condor. They all look like this. I'll just reset this here. So this is what we're looking at. The losses occur on the extreme up or down, and the high probability area in the middle is where we make our profit. Now, one thing I do want to point out, because a lot of people say this, and as soon as they see an iron condor for the first time, they end up saying, well, how come we're risking losing so much on the sides to only make a little bit in the middle? So it's a valid question. It does look like a very unbalanced trade here. But you have to remember that I'm never going to hold my iron condors until expiration. Actually, far from it. This is probably going to be about a 20 to 25 day trade. So actually, this turquoise line, those are the expiration prices. And those don't matter because we're not holding it to expiration. So when you see iron condors, what you really want to train yourself to look at is just that pink line there. That's all we're looking at. The turquoise lines are irrelevant. We're going to be tracking this trade. The pink line is going to be moving up or down depending on the daily profit. And that's when we're going to know whether we're going to stop loss out or take our profit and close the trade. When you see iron condors, just look at the pink line. Don't even worry about the expiration prices. But now we can actually view this in the original chart. So we've got strikes of 312 and 271. If we input 312 and 271 into this original chart, we're looking at something like 271 here and 312 up here. That's the range we're looking at. And remember, it's actually probably closer to about here because we're not going to hold this trade open very long. So we don't know what the underlying is going to do. Maybe it goes above, maybe it goes below. But again, the probability is that it's just going to chop around in this range. That's why I love these trades. So now I'll just review the Greeks really quick. The first one, of course, is delta, and this is a delta neutral trade. It's market neutral. You can see that pink line. The numbers are going negative here and then positive here. That means it's delta neutral right in the middle. We don't care which direction this trade goes, as long as it doesn't go too far in either direction. Delta neutral. The next one is theta, and remember this is a theta positive trade. We do benefit from the passage of time. And while that 77 cents doesn't look very impressive, remember that's a daily theta, and it does build exponentially over time. So as long as the market is chopping around in this middle range, we will be collecting that easy premium. And lastly, we'll look at vega. Iron condors are vega negative. Like I said, this is why we open them during higher volatility. We want to make sure that the trade we're in has the highest probability of success. And right now, volatility is elevated. On balance of probabilities, it's more likely to fall from here. And our iron condor is going to benefit from that decrease in volatility. For me personally, I'm always very comfortable trading these types of trades. Delta neutral, theta positive, vega negative. It's a very advantageous, high probability trade. We love our iron condors here at Options 360. So that's an example of the great and powerful iron condor, a personal favorite of mine. Now there are different variations as well. There's broken wing, wide body condors, many different ways to set them up to target a specific market environment. I'll get into some of those examples in future trades. But the general characteristics of the iron condor are as follows. They're delta neutral, market neutral trades where we're looking to profit from the lack of movement in the underlying. This is great for choppy markets, and in my opinion, a great addition to any portfolio because they do tend to have a lower correlation to the stock market, as well as other trading strategies, so it's a great diversification tool. Iron condors are theta positive, which means time is always on our side. We can set them up, and if there's no clear trend in the underlying, we can just sit back and pocket that daily theta decay. They're vega negative, which is why we do like to open them during higher volatility environments. That lets us set those wings a little bit wider, and then we can profit from an expectation of decreasing volatility. And lastly, they are both limited gain and limited loss trades, so it's well defined ahead of time, and risk management is just done through proper position sizing and honoring those stop losses. As option traders, we do need a very diverse toolbox, so we always have the right one for the job. And iron condors are right near the top of the list of usefulness, so prepare for many more iron condor trades in the future. Thanks for watching.